Hello and welcome back to Katie's Business Tips. Michael Lapede here, going to talk to you about loans and whether to get a personal loan or a business loan. Which is the best for your business? Do you need financing for your business? Not sure whether you should take out a business or personal? Maybe that's a question for you. Well, you always want to know what is the best move and how do you weigh out the difference, pros and cons? Well, first of all, let's look at a personal loan. Money loan to you as an individual, not to your business, right? Based on your personal credit score or your debt ratio, right? Can be used for almost anything though. That's the nice thing. If you borrow personally, it can be used for pretty much anything. The loan for the business is different because that's a business loan or a loan to the business, money loan to the business or the entity. Maybe it's a corporation or partnership, maybe even a sole proprietor. The business loan is generally based on the business income, the business financials, the business credit, and so forth. So that's the difference between, of course, the business and personal. So let's talk about the pros and cons of the personal. First of all, the personal loan is easier and faster approval process, less paperwork, usually useful for new businesses. Also, if you borrow it personally, put it into the company, it's a shareholder loan, you can take it back tax-free, you can write off the interest, so there's some benefits there. The cons is that you are personally liable 100%, let's be honest. Higher interest rates could start affecting things, could affect your personal ability to borrow maybe for your own personal mortgages. There's more complications. There's another one with your accounting because you got to calculate for the personal money put in. So there's lots more complexities and potentially things that can go wrong. But again, there's easy qualification and some benefits there. Now, the business loan offers a clear, distinct separation between the business and the personal. So you're getting a loan for the business, by the business is one applying, right? Now, the business loan also offers larger amounts. So typically, not always, but typically you can get larger amounts for the business than you can for personal as well. And business loans can build the business credit. So if you just get a personal loan, you're only building your personal credit, whereas a business loan also builds the business credit. The cons, of course, more documentation and harder financial approval. So some of the factors you want to consider in weighing this out is, number one, if your business is incorporated, then it makes sense to keep the liability of the business. If it's a sole proprietor, it's almost irrelevant. It's personal anyway, right? But if it's corporated, if we can keep the liability in the business, avoid personal guarantees and all those things, we're much better off. If your personal credit is strong, then your business credit is not strong, and you know you can get more at this time personally, it may be okay to go personally for now and then eventually build it into business credit. If you need a larger amount of financing, then of course you're going to need to go with the business if you can't qualify personally, but hopefully your financials will support that. And if you don't like taking on the personal risk and you're just like, no, a risk adverse, then probably through the business anyway, right? Let's be honest. So those are some questions you can ask yourself. But remember, the business is unique and requires unique financing solution. There's no one size fits all. So you might have to do a part and parcel, maybe part business loan and part personal. There's ways to do that. So take time to consider all the factors before making your decision on whether to borrow money personally for your business or borrow money the business itself. If you have any questions, we'd love to hear from you. Look forward to seeing you in our next business tips video.